Want to stick with equities now and bring in Andrew Arons. He is founder and partner at Synergy Advisory Management Group. Andrew, good to have you here. So there's been a lot of volatility in this market over the past few days. I have a feeling it has something to do with a little window dressing as we move to close out this quarter. What do you think?
Seeing quarterly window dressing happening right now. A lot of volatility in the markets. I'm still extremely bullish on the markets right now. With rates staying low and the rollout of the vaccines, I think we're going to do very, very well, going forward. I am looking for new highs as we get into the summer months.
So today's reports about consumer spending and income, I know that's a backward-looking report, but that doesn't give you pause at all in this market?
No, I mean, we did really well over the holiday, and there was a little bit of a pause here, but the rollout of some of the stimulus checks here should be really good for the market. And the earnings news coming up for the first quarter should be really good. And we all know the market trades on earnings, and the markets should do well, in my opinion.
Okay, so if the markets are going to do well, in your opinion, is it going to be a steady climb up, or do we pause here, consolidate, move to the downside before we start to move up?
Well, what I think is going to happen is I think we're going, we had a 50% retracement right now from where we were a few weeks ago. And now, we're going to go sideways here for a little bit. We're starting to see the rotation into the dividend paying stocks. This is all, in my point of view, very, very bullish for the market. We're getting a little pause here in the technology sector, and I do think that will resume, and I do think that the growth stocks will continue to move.
What do you like in terms of some of those dividend paying stocks right now? Can you share some specific names with us, Andrew?
Yeah, sure. I mean, I like Exxon here. Exxon's paying over 6%. I like McDonald's. We like JP Morgan, that's paying like around 2.5%. AT&T, one of our favorites, at 7%. So, a lot of people are looking for yield right now. The S&P, the highest 8 dividend yielding stocks are up for the year. So we're looking at people trying to, look for yield, and that's what's happening right now in the market.
What about the bond market maybe taking some of the wind out of the stock market sales in the coming weeks? I mean, we've seen how rapidly those yields in the bond market have risen. They seem to have stabilized right now, but is it something you're keeping an eye on?
Yeah, we're definitely keeping an eye on it. I think you have to keep an eye on it, but I think it's going to stabilize. The Fed's going to keep rates low and, for job growth and for a whole host of other reasons.
And what's your take on inflation? I mean, we're already seeing inflation seep into a whole bunch of things like food costs and raw materials. We know the Fed has said they're going to do all they can to stick with this economy until the recovery really takes hold. But are you making any changes in the portfolio right now, anticipating that inevitable rise in inflation?
No, I just think that we're going to try to keep inflation in check here. We're seeing little blips here, but I think right now it's pretty tame.
And talk to me more about this rotation out of tech into value, which we have been seeing now over the past, I'm going to say 4 to 6, maybe 8 weeks. You said a short while ago that you believe that this is temporary for tech. Define temporary for us, because I think lots of folks are hurting right now who have big positions in big tech.
Yeah, I mean, I think I was predicting a style correction, at the end of last year, and we got that. And, a lot of these stocks whose balance sheets don't look very well have done extremely well in the month of March. And, I just don't think that that's going to continue. So I think there's been a little bit of a pause on the tech front. Also, we're coming up to the full year. So for tax purposes, people getting out of positions. But I do think that the tech stocks are going to do very, very well going forward.
You said the magic word, Andrew. You said taxes. And I'd love to get your thoughts on that. We know the Biden administration has been very clear that they want to raise taxes on the top 1%. They want to raise the capital gains tax and on a slew of other taxes as well, personal income tax. Is that going to be a hurdle for any big rally in this market in 2021?
I guess we're just going to have to see. I really don't know what things are going to look like. I don't think anyone knows. We're all kind of just, going to wait and see as to what happens. But I don't think it's going to be a tremendous hurdle. I think the markets are going to do very, very well, as I've said before.
All right, Andrew Arons, the glass is half full for you, founder and partner at Synergy Advisory Management Group. Thanks for being with us.